Oh boy, here we go again. Back to work tonight. Hope you guys had a fantastic day. What a fantastic day today. I know a lot of you guys made some money on those beautiful fake out breakouts we talked about in last night's video. But remember, back to work tonight. Let's refocus, get back to discipline. We got a big, huge gap down here after AMD's earnings, after hours, and a lot of volatility. That means there's probably a lot of money to make tomorrow. So blinders back on, refocus. I don't care how much money you made today. Let's get refocused and put a game plan together for what should be a fantastic session tomorrow after this big gap down we saw after hours. We're getting ready for Wednesday. I'm going to go over all my favorite trades in tonight's video that we have a game plan to make some money on hump day tomorrow. Before we jump in, though, and get the party going tonight, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video. And if you enjoyed this stuff tonight, if you like these videos, as always, hit that like button for me and give me a shout out, give me a holler down in the comment section. Thank you so much for sticking around, tuning in, supporting the channel. Let's get ready for Wednesday, though. These big gaps, I love. How do you not love earnings season, right? I know it's summertime, it's a bit slower, but I'll tell you, I wish we had earnings all year long. Okay, where are the best trades setting up here for tomorrow? Now, as you guys know, if you watch regularly, I like to begin on the 60-minute chart, on the S&P and the SPY, the NASDAQ and the QQQs. I like to use the 60-minute chart to help me plan my trades for the following day. So we'll start first on the 60, and then later on in the video tonight, I'm going to drill down and we'll use some tick charts to plan the best entries and the best entry tactics for tomorrow, because tick charts are much easier to kind of find entry patterns, right? So on the 60-minute chart right now, boy, I'm glad I waited until after the open here in Asia to record this. Everything's still pretty bullish, right? We're gapping down big time right now, but everything's still pretty bullish. Bull market into a trading range on both the S&P SPY and the NASDAQ and the QQQs. If you watched last night's video, we talked about how we were looking for basically some bear traps, right? Some fake out breakouts below that low. And although we definitely got some great entries, it was a pretty easy morning this morning in our trade. I know a lot of you guys did pretty well on those fake out breakouts. What didn't happen? They didn't follow through, right? They didn't follow through the way we would have loved to have them follow through. You know, big earnings this afternoon. When I see this, I'm thinking, oh boy, we're probably going lower to attract more buyers into the market. Now, I had no idea we'd gap this far down, but that lack of follow through off the low of that trading range was a huge tip off going into the close here this afternoon. And now we're basically getting evidence of that, right? The market now is rotating lower, most likely to attract in more buyers, right? Give buyers a better price to get long at. And hopefully, if we do it right for tomorrow, hopefully there'll be some beautiful bear traps in this for us to run right back up into that trading range. So a lot of potential here. Definitely got some bear traps on my radar for long trades. I want to talk a lot about ranges though tonight, because if we're lucky, if we really are lucky tomorrow, we'll get a nice big range down here. That would make our job, that'd be the best possible scenario here for tomorrow. And I'll talk about why I say that here in a moment. So don't worry, we're going to go over all the details in this video here tonight. Now, before we jump in though and kind of get our hands dirty on these charts a little more here, let's quickly double check the schedule for tomorrow. We have pretty much a wide open day going into Wednesday. We pretty much now shift our focus to that big earnings coming out on Thursday, right? Tomorrow, it's a pretty wide open day. There really isn't anything. I mean, you know, the big companies, CVS, PayPal, there's big companies there, but they're not going to be nearly as big as the AMD number we saw a moment ago, and of course Apple and Amazon later on in the week. So we really shift our focus now to Thursday. Now back to our chart. Let's now go over my favorite trades here. I'll start first on the Emini and the SPY, and we'll finish up tonight on the NASDAQ and the QQQs. Like I mentioned before in the introduction, bullish into a trading range. We didn't get that rotation off the low that we would have all loved. I'm sure a bunch of you guys had some juicy targets waiting up there. Wasn't as dramatic as we're hoping for. So we assume it now is rotating lower to attract in more buyers, right? And hopefully while it does that, it traps in some sellers here for us. That'd be the dream come true for tomorrow. Let's now drill down to our tick chart. Okay, I like to use tick charts. Tick charts, they just make everything easier. They definitely make finding entry patterns, entry setups a whole lot easier. If you're watching for the first time right now, this is a 7,000 tick chart upper left-hand corner, and this, my friends, is the 21 EMA. It's not the only indicator we use, but you will see in our free trading classes, it's a very, very useful indicator for finding trend direction, finding entries, finding exits. It's a very, very useful tool here. That's what you're looking at on the chart right now. Now, there really are, you know, probably three main components that are tipping us off here right now to where the best trades are probably going to be here on the E-mini and the SPY. And it's quite different, by the way, than it is on the NASDAQ. First of all, we're overall bullish. Okay, this is not a bear market overall. It's a bull market overall. And so this move down has to be seen as a buying opportunity, right? I know it's pretty big. I put this kind of big red candle on here, right, to kind of illustrate that was actually one big gap, right? And basically a gap is really nothing more than one big red candle, right? So that's all it is, right? It's basically a breakout going lower. So don't let this big gap down fool you into thinking this is a bear market. Now, if they hold the pullback, we roll over and keep going, right? Okay, then we can renegotiate this. But right now, though, this will likely be seen as a buying opportunity in an overall bull market. Second component, bear move into a trading range. Okay, ranges act like magnets. Okay, very important clue. The third component to this, which might be the most important part of this, is that whenever we see a breakout that has this much strength, we then start thinking about breakout pullbacks. And we talked about this quite a bit last night on the long side, but we have to assume now the underbelly, as I call it, right? Kind of those support levels below that trading range now get flipped into resistance. And we have to think that this is a very strong move down, and we're probably looking at a breakout pullback to retest that low. Now, I mentioned earlier in the introduction that what I really hope we get tomorrow is a range down here. So I'm gonna talk about that a bit later on in the video. That is the primo scenario we should hope for here tomorrow, and I'll talk about why I say that. So don't click off this video. You're gonna want to watch all the way to the end of the section on that tonight. So this is where the money is made right here, right? I know it's simple, but I think if you play our cards right today and tomorrow, right, there's money to make in the buy side. Right, buying off that low. Got to be careful, right? Can't pick a bottom on this. There's one specific type of entry pattern we'll look for to kind of pick the bottom on this. I think there's definitely some shorts to be had off the underbelly of that trading range. And you guys know me. If you watch these videos, I love these double bottom reversals. So there are really three components to this. Now let's kind of dig into this idea. All right. So again, the breakout pullback is kind of what you want to be thinking about as the overall structure, right, on a move like this. So knowing that is the case, as we're going higher here, we have all of that strength going lower. So I have to be careful picking a bottom on this, right? We're overall bullish, right? So I'm not looking to short right now. I will later on, right, once it pulls back a little bit. But right now we're too low, right, to be selling. What you want is you want a bear trap, right? You want a bear trap. In other words, you want a crown reversal pattern to buy off of this low. Now, in my free trading classes, you guys are learning about two entry patterns. One's called a failure pattern, and the other is called a trap pattern, right? My favorites are always traps. If you put these two together, right, that creates the crown reversal. Okay, so very strong move down. We have to anticipate the bears are going to try to sell this thing as it goes higher. And to avoid that trouble from the bears here, I want to let these bears try once, let them try twice, and look for an entry right below a prior swing. Okay, this is a little bit of an advanced pattern, all right? So bear with me on this, right? Notice how they are higher highs in price, okay? And then the signal will come off that trap low, okay? I call it a crown reversal. It's basically wrapping together a failure pattern, all right, along with a trap pattern. I teach both of those patterns, failures, traps, along with all my favorite entry patterns in my free trading class, which reminds me, I know a lot of you guys are watching for the first time right now. If you're not making consistent money, these markets are way too good right now not to be doing well. If you're not making the money you want right now, I'll put a link up top there in the upper right-hand corner. Grab that link, take that free trading course, because the strategy you'll learn in that very short video series will not only teach you my favorite entry patterns, that's great, but more importantly, I will teach you a stupidly simple trick that we use every morning in our trade room to know exactly where the best winning trades are going to be that day. If you're tired of missing the best trades, if you're not making consistent money right now, definitely grab that link, and you'll love that free class. I got a lot of great feedback recently from you guys on that free course. And also too, I'm going to put all the links we talk about tonight down in the description of the video, so in case you can't get that pop-up up in the upper right-hand corner. So that's the way you want to look to get long on this. Now this could be, right, this could be a different, slight variations, for example, right? It may kind of pop up and try to go higher like that, right? So it may be stretched out a little more, but just be aware, right? Buyers will be looking to trap in the bears, right? To use their stops as fuel, right? To squeeze these guys, and they're going to use bear traps to do that, all right? To do that. Now, let's talk about more. Okay, as we go higher here, we talk about that underbelly of that trading range, right? That's the area where we anticipate more bears are going to be coming in. This one's a little bit tricky because again, we're overall bullish, right? Not a bear market right now. So it's very, very easy to speculate. They may punch right through this area like a paper napkin, and we may end up running back up into that range. Now, real quickly, what would that look like, by the way? What would it look like if it punched up through that 90, this whole range right there? What would it look like? Here's what it looked like. It'd be a pop and grind. Okay, pop and grinds are really easy. It'll pop up and begin to grind and grind and grind. Okay, if that begins to happen, in other words, we punch right through these key areas of resistance, right? Now that range magnet overhead, overall bull market, right? So no one should be surprised, right? If that happens going higher here. I'm going to mark a trend line off that high, all right? I'm going to mark a channel off of that low. And what do we always say in our trade room? Or on these videos too, right? Look left, find prior swings, and like I said, the money will probably be made with bear traps. Okay, now I love traps. This could also be if we were to get underneath that 21 moving average, the bears may come in, may try to short this thing back down again. We may not get the trap. We can always look for a failure pattern below that 21 EMA. Okay, this will be a great pattern setup because now we've got all of that potential rotation coming in off of that low. You have to think targets coming off top of the range, targets coming off 9.25, right? Big wet dream target for the buyers tomorrow, all the way back up, take out those big highs. One step at a time though, right? One step at a time. That would be where the buyers would love to get there. But I digress. I got off topic, okay? How do we short this thing on a pullback? There's a good chance to hold that pullback. Okay, what's the problem though? The problem is overall bullish, range above us, easy to think this is a buying opportunity. Okay, got to be careful. Now, if we get back above this moving average and we start seeing these buyers coming in and they're trying to punch it, right? They're trying to rip this thing back up into that trading range, and they try once and they try twice, right? Now I can look for, ideally, you want that bull trap, right, going higher. Now, look how I draw this. I draw these very specifically because I want you guys, I want you to make money with this stuff. So as we're going higher, we get back above the moving average. Now the buyers are coming in, and they're going, let's run this thing, right? But again, strong move down. Underbelly of that trading range. Got to be careful right here. Got to be really, really careful. If the buyers come in and they're trying a couple times, remember, anytime we see strong move like that, right, that's the target, to retest the high, okay? That's the objective as we say, right? Strong move down, it's going to retest that low. If I can get these buyers trapped in here, I have two options. The best one is that bull trap right above that high. Remember, lower low in price, okay? Lower low. Buyers want to buy low. We have to trap those buyers in, get them to wrap that rope around their neck. And then once we see that nice strong signal candle, which you guys will learn about in the free trading course, bingo, that's the short signal for that retest of that low. All right. The most aggressive way to do this is just to wait for those buyers to come in, try once, try twice, and then think about where their stops are, right, and simply sell into those stops. That's not as desirable though, right? It's not as desirable to sell below that low because now think about your risk-reward ratio, okay? Where's your reward? Target's back here, right? So reward is right there. What's your risk? It's right there. Okay, this is where understanding where the market wants to go. Does that make sense, right? This is not nearly as desirable of a short trade and therefore not as reliable because you're not going to get big professional traders to take that trade. Understand this difference and you are so far ahead of your competition in the market. This risk reward, right, is horrible. Well, it's not horrible, but it's definitely not as good as if I grab the trap right above that high. Now what's risk reward? Now risk is right there, reward is right there. Do you see the value now of a trap high? Right? If you get this is really, really important. If you get this simple aspect, you're way far ahead of the game. If this is the first time you've learned this, give me a hell yeah down in the comment section below. Let me know if this is making sense, because when I learned this kind of way of thinking about risk reward, it kind of blew my mind. It kind of flipped the way I looked at entry patterns. Every entry pattern you look for or look at needs to go through the lens of that risk-reward ratio. That's why traps are so valuable. Let's keep going. So now we know how to buy it off the low. We know how to sell it back down again. Maybe one of the easiest setups to make money on tomorrow will probably be if we get the buy off the low, the retest of that low. Now what's going to happen? Professionals are shorting up here, right? Professionals are selling high, right? They're selling off resistance. Okay, remember, to make good money in the markets consistently, you're going to be in the habit of selling high, sell at resistance, sell with small risk, big reward, right? That's what professionals do. So who on earth will be selling down here? Rookies, right? Inexperienced traders, traders with small accounts, small tight stops, and they can't defend themselves. Okay, this is why I said this is one of the better trades for tomorrow, because if we do see, well, we already have a strong move down. If they pull back and retest that low now, okay, if they pull back and retest that low now mission accomplished. Everybody who sold that pullback, they should be taking profit at that low. Now calling the rookies, get those bears coming in and trying now, and we can use their stops, right? Use their pain, as my mentor, almost 20 years ago would always say. Think about if you were a seller, where would you be throwing your keyboard, right? Where would you be in pain and buy right into that area? If you watched last night's video, I talked about how you want to find areas where everyone's a buyer. Okay, this is one of those scenarios where if we double bottom, overall bull market, range above us, trapped in sellers, right? Everyone becomes a buyer as soon as we punch it, right? As soon as we punch and the bears get stopped out, the buyers are buying low, right? Overall bull market, everyone's a buyer in these scenarios, and this should be a nice, easy, right, roll going higher here. Now, a follow-up on this, just be aware of this, a follow-up on this, these oftentimes will punch. They will oftentimes punch and run higher. What is the best entry if it punches and runs higher? We're trying to go back up into that trading range. This one's easy. Buy a bear trap. Okay, buy a bear trap. And again, it's time for you to learn how to find traps. Repeat after me. Strong move, shallow pullback. That shallow pullback will often miss the moving average, right? Strong move, shallow pullback, higher high in price, traps, baby, right? Strong move, shallow pullback, right? That shallow pullback drives everybody crazy. Higher high in price confirms that shallow pullback isn't going to roll over into a range here. And I will talk about that range here in a moment. Strong move, shallow pullback, higher high in price, trap, right? At that point, again, where does it want to go? Back to range high, up to 09 1/4, right? Up to these areas up overhead here, and we'll of course know more about that here for tomorrow. Oh boy, here we go, right? Rolling back up, right? What's the game plan if it keeps going? If it keeps going, what's the game plan? The game plan is buy as low as you can, right? Buy as low as you can with, you got it, with bear traps. Let's keep going. Let's keep going. I want to talk about a range down here. All right. It doesn't seem like a range right now, but who knows? We may get that bear trap back up. They may retest, and we may get stuck down here into a trading range. Let's grab the NASDAQ. Okay. The NASDAQ is a little bit different than the S&P. But I think you'll notice a lot of these are going to be similar. NASDAQ on the 60-minute chart, almost the same exact scenario. Bull market into a trading range. Like I mentioned earlier in the video tonight, that was easy pickings, right, on that fake out breakout below that low, but they never got the follow through, right? And so when we finished the day today and I'm like, what are they doing? Why aren't they getting that follow through? My initial kind of instinct was, oh, they're gonna run it lower, try to attract in more buyers, right, to buy low. I thought this gap down might go all the way back to the top of that trading range. Because why? Because ranges love to break out pullback, right? So I originally thought if this thing gaps down after that AMD earnings, NASDAQ's a wild animal. I thought we might gap down all the way to that 15,650 area, give or take a couple ticks there. Obviously it didn't yet, but this is nothing more, at least right now. Things could change tomorrow, who knows? But this appears to be nothing more than a great spot for buyers to buy into it, to load the boat, and then try to make their move back up into this range. Let's go out and grab the tick chart now. And again, just like on the S&P, right? Think about this as one big, red candle right there, right? That's all that basically is. I would say there are two, maybe three big components on the NASDAQ right now. One is the overall bullishness, right? So we're leaning towards the buy side right now. The second thing is when you think about it, we're basically one big range. It was yesterday's range, today's range. Put them all together, it's basically one big range, okay? That range acts like a magnet. And what do we see today? We drop below it today, gets bought right back up, right? This is another example of an area to buy right back up, right on, at least this point, up into that trading range. That is our second clue. The third clue is this big gap down, right? That big gap, you can't ignore that gap down because again, that gap down, right? It's nothing more than one big red candle. And anytime we see a strong move in one direction, we have to expect a pullback and a retest of that low, okay? Now, it's a slightly different game plan, a different look on the NASDAQ, but it's almost the exact same thing, right? So there's the underbelly. In fact, really, this whole area right there is the underbelly now of that NASDAQ. So what's the game plan? It's the bear trap right off the low. It's the up, trap the buyers in as they try to rotate back higher and sell back down to retest the low. Remember, before you sell short on that, how is your risk reward? Okay, that will be the filter that we have to look through tomorrow to know whether or not I need a trap, right? Or if I can short it on basically a buyer failure pattern, right? Okay, that risk reward ratio, right? If we go up and we start going 1, 2, right? You're not going to sell right there, right? No, right? That's risk and that's reward. Okay, no, you can't do it like that, right? You want to wait for that bull trap going higher and then look for the short back down. Does that make sense? Right? So there's my risk, there's my reward. Okay, big difference, much more attractive trade. That's why I say let the setup will tell you based on risk reward, it will tell you what type of entry you need, right? If I run up and I'm 1, 2, right, I can right now that becomes a lot more desirable, right? There's my risk and there's my reward. All right, I don't want to beat that horse too much on this, but this is something that will change the way you look at the game. So I want to make sure you guys really kind of understand that part of it. So pretty much the same game plan on the NASDAQ. Let's talk about a range here. Okay, let's talk about a range here. So if we really get lucky at some point tomorrow, this will turn sideways into a range down here. If you're a student of mine in my trade room, you're probably laughing right now because you know how much I always wish for these, because these are one of my favorite types of markets. So we're overall bullish, right? Overall bullish. So if we can get, let me get rid of some of this here so it's not distracting us too badly there. Okay, and if we can get a range here, okay, it'll be basically a bear move down into a trading range, and what you want is you want a fake out breakout below that trading range. Okay, these are some of the, I'll tell you right now, take a screenshot, put it in your journal, learn to look for this. And remember, the situation is very specific. It's an overall bull market. Okay, overall bull market with a bear move down into a trading range. Ranges act like magnets, right? So one of my favorite trades, and we do a lot of these in our trade room, is once we see it break down, right? Once it breaks down below that trading range. Now, you know me, I'm not somebody who likes to pick tops and bottoms. So I'm not going to pick a bottom on this. What I'll do is I'll wait for those bears to come in, right? Let them get trapped in with a failure pattern, right? Or a crown reversal, depending on risk reward ratio, like I mentioned earlier, and then try to buy this thing, right, as it pops back up into that trading range. Okay, this is nothing new. We talked about this a few moments ago on the E-mini. What is really powerful about these particular types of situations is that this is what we call rotation off the low. Okay, it basically winds this thing up and gives you potential for a big blast going higher. Okay, in my free trading classes, we talk about pendulum swings, the amount below, right, the amount above, and as it rotates off the low, now that's a lot of bullish momentum. And oftentimes what happens is with these is they'll punch, right? They'll punch and they'll keep on going. Right? What we could do is go out, find a new trend line off the high, right? Find that channel off the low, right? And then go out, mark up those swings. And what do we always say? First test is the best test. You want that buy off that channel. All right? This, again, if there is a trading god up there right now, watching over us here on this video right now, this is what we want for tomorrow, because it makes it easy. It makes it easy to structure the trade because you know you have that range above you already. It's a magnet. You're at support, overall bull market. Again, we're not going to pick the bottoms, right? Use my failure pattern, my 2-try failure to trap those bears in, and we'll see if we can punch it back up into that trading range. And then again, if it begins to kind of pop up and grind like that, you know, keep in mind, right? I'm doing my best right now to kind of illustrate this for you. We'll do more of this tomorrow in our trade room. But if it begins to kind of pop and grind like that, right? Okay, now we know the buy off the low of that channel, right, should be a very reliable trade now as to make our way back up into, that trading range. Okay, so that range would be perfect here for us. Now, let's say just for kind of argument's sake, we'll play devil's advocate. Let's say we do go in, right, and we go into a range here, but we don't get that run and that buy off the low, right? What would it take here right now for this to make the move back up into that trading range? Okay, this is kind of a curveball here. What's the problem? The problem is we've got this area right here, right? That area, we have to be careful because as we go up, what's going to probably happen? Buyers will try to keep it going higher. Once, twice, failure, back down into that range because, again, that is a magnet. Oh, and by the way, if we do see something like that, mark up the amount above, mark it down below, okay? That becomes key support, and that now is where 1, 2, trap, gotcha, right, and right back up. That same game plan I just mentioned, right? Again, ranges, in my eyes, they make it so much easier because you can structure things. You know the range, you know how big the move is. So it's just for me personally, and a lot of our students, we look forward to ranges because they just make it easier to kind of have a good idea of where the best trade will be at that time. So the most important thing though is if we go sideways here, right? If we go sideways here and we wind up popping up, right? We pop up. The buyers come in, they hold off that moving average and they jump off that moving average. Okay, right? Or they pop and they grind, right? They grind. It does seem more realistic to get a grinder. It just seems like if I had to guess, I would guess the grinder would probably be a little more likely for tomorrow. But I don't know, right? I don't know, right? I just want to make sure I visualize this ahead of time. That way my game plan in my mind is all set. And tomorrow morning, we'll have something to reference when we go looking for this stuff tomorrow in real time in the trade room. The bottom line is we have to see something convincing going through this area here. And then remind me again, one more time, what is the best entry as we go higher here? What's the concern? The concern is as we go higher, who's up here? Bears, right? Anybody who bought down here, okay? Any gutsy trader, big pocket trader who bought down there, they're taking their profit up here. So what do? You wait for what? You want traps, right? You want those traps, right? Traps are going to be where the money is if it does pop up and grind. And again, find that high, bring it off that low, right? And I'd love to get some trap right off the low of that channel. And again, these could really rip now that we've trapped in some bears and really soaked up some buyers there, right? Top of the range, right? Other side of that high. And again, right, kind of the fantasy target for the buyers tomorrow, all the way back up to take out that high here. All right, guys. So again, very similar game plan on the breakout pullback on the NASDAQ. Okay, same idea on the S&P too, right? So if the S&P goes sideways here into a trading range, same basic idea, right? Give us that fake out breakout below the low, punch that back up. If it doesn't go lower and goes higher, make sure we clear through this area, either with a 1, 2, 3, right, or a pop and grind. And again, there's one very simple pattern we're looking for as we go higher. It's a bear trap, right, as we go higher. So lots of great potential here right now for some bear traps going into Wednesday. And you know what? Remember, it's summertime trading. It's the month of August, right? I love summertime, but, low volume, lots of earnings coming out next couple of days here. So anything is possible for tomorrow. I'm sure the market will throw us a curveball somehow tomorrow morning, but that's exactly why we have our trade room. Every morning we get together. We've rehearsed the game plan for tomorrow. Now tomorrow morning, 8 o'clock Eastern time, we're going to come back together again. We'll trade this stuff together. If you're looking for a place to come out and learn this stuff and trade along with me, I can't think of any better place to do this the right way the first time around, start messing around on your own, than with me every morning in the trade room. I'll put all the membership links. I'll put all the free video class links down in the description of the video. I would definitely recommend start with the free course first. That we can learn the basics, learn the fundamentals, and that will kind of get you warmed up so you're ready to come in and sit down and kick some butt with us as a student in the morning trade room. All right, guys? If you have any trouble along the way, any questions, any issues at all, the easiest way to get help or questions answered is to call the office or use live chat. So if you need help, don't be a stranger. We're always here to help out if you guys need it. So definitely keep in touch. Don't be a stranger if you need us. Boy, what a great day today. First day of August. It's going to be a good one tomorrow. I got a good feeling about Wednesday, tomorrow morning. Hopefully, I'll see you tomorrow morning. We'll trade this stuff together tomorrow, 8 o'clock Eastern time. If not, you better come back tomorrow night. We're going to keep this party going here this week. Thank you so much for watching tonight. I appreciate you guys tuning in and supporting the channel. Enjoy your evening. We'll see you guys next time as well. Be well, be nice to each other out there, and be here tomorrow. Adios, amigos. Bye-bye for now.